We think the business cycle peaks sometime in end of 2025. And that would suggest a crazy sort of target that could get somewhere between $500,000 and $1 million in Bitcoin. Do I expect that? Probably not, but who the hell knows, right? These cycles can be crazy, and this one feels more like the 16-17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing. Well, not in the US, but central bank balance sheets were rising. We saw 20% growth and what happened of liquidity, and what happened was crypto absolutely exploded.
Raoul, the founder and CEO of Real Vision, has the craziest price predictions for Bitcoin, Ethereum, Solana, and the entire cryptocurrency industry for the 2024 and 2025 bull market. As we get much closer to what many have predicted could be the grandest Bitcoin and crypto bull market ever, the former Goldman Sachs executive recently shared an interesting analysis of the deep correlation between crypto, tech, and macro. Powell predicts that the 2024 and 2025 bull market will be a very special one for crypto because it is both crypto and macro summer. With the confluence of various bullish factors, the Real Vision CEO expects a significant rise in crypto asset prices, with Bitcoin going as high as over $200,000 per coin in May and up to $1 million per coin before the end of the bull market. Powell believes a global economic reset happened in 2008, with the world's major economies realizing that the two most important factors for GDP growth, demographic and productivity growth, are either flat or declining. Yet debts have kept piling up, hitting 100% of GDP for most of these economies at different points since then. To delay the inevitable, Powell believes central banks decided that the best course of action was to put the debts on their balance sheets and print money periodically to keep the fragile economies balanced. But by doing so, they passed a point of no return and have to continuously and constantly provide liquidity to protect the balance. This is why Powell says he's generally bullish on asset prices both in the short and long term, because central banks will keep pumping money into the economy, providing the markets with adequate liquidity to keep asset prices up indefinitely. But the flip side, according to Raoul, is that the traditional asset classes are not actually growing in real terms, just responding to the continuous liquidity pumps without any real appreciation in value. Because the liquidity being provided potentially means continuous currency debasement without any real increase in purchasing power. Powell's thesis is that everything is wrecked, and the only way out of the GDP disaster is to increase productivity growth. This is where crypto, technology, and the exponential age come in, and why the macro analyst is so bullish on these two important asset classes. This is a Raoul Masterclass you don't wish to miss. Please watch the video to the end, subscribe to the channel, and don't forget to give the video a thumbs up if you find it informative. Thanks, and enjoy the video.
I care about secular trends. Secular cycles, when you get them and capture them in the right point of the business cycle, become explosive. Remember that chart of the Nasdaq, the beach ball underwater exploding above the water because the Fed just took the foot off the gas pedal, or the brake, sorry? That's the power of a secular trend. It outperforms any other trend, and it's more calibrated to financial conditions. It's more juiced by the business cycle than anything else. These are the things that matter to me. And there's two massive secular trends that dwarf all others. Crypto. Here's the chart, the long-term chart of Bitcoin since 2013. Some people use this chart longer term. I used to. But the early cycle was so kind of ridiculous that it screws up the chart. Other than that, it's actually a perfect log trend. These cycles can be crazy, and this one feels more like the 16-17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing. Well, not in the US, but central bank balance sheets were rising. We saw 20% growth and what happened of liquidity, and what happened was crypto absolutely exploded. I kind of feel like that's the case. I don't focus on the end target. I focus on the structure. But I'm just showing you the magnitude of the opportunity, and we're still at one standard deviation oversold. It's all to play for. We've barely started. Nasdaq, another beautiful logarithmic trend. I mean, this is a killer. That's all you need to know. Is the world going to be more digital tomorrow than it is today? Yes. Will it be more digital in 2 years' time than it is today? Yes. Will technology reach more adoption in the coming 2 years? Yes or no? Yes. I ran that poll on Twitter. 95% of people agree with me. Yet most people keep missing this trend. They don't want to believe it. It's expensive. I think it's a bubble. Blah, 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 blah. Meanwhile, best fucking trend you've ever seen. So just capture the trend. It suggests the NASDAQ somewhere between 25 and 30,000 at the end of this cycle. That's another great set of returns. So those are the two mega trends. How do they compare? Well, simply put, going back to 1990, kind of the dawn of the internet and computing ages, the NASDAQ has just relentlessly outperformed. All of the noise you see on Twitter, oh, mean reverting, the NASDAQ's expensive, blah, 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 blah. It is the biggest trend you've ever been given. And many of us in macro land didn't see this. We kept fighting it because of what happened in 2000, the bubble and bust. But that, as you can see, was extraordinary. The rest, super smooth. It's the same log trend. And I don't see that changing. Could we create another bubble based on AI and the exponential age? Sure. Let's make some bloody money from it, as George Soros would say. But I don't see any elements of a bubble. It's just a normal trend that eats all other equity sectors alive. There is no point owning other stocks. Every other bet is suboptimal in this world where everything is correlated.
According to PAL, NASDAQ has outperformed the S&P index by 5% yearly since 1990. It's even outperformed more in recent years, outperforming and absolutely crushing the S&P 500 index by over 100% a year. Bitcoin is equally crushing the S&P and has outperformed it by almost 100% every year since 2013. According to PAL, crypto and tech are secular trends that align neatly with the secular trends of the business and macro cycles. While PAL is bullish on both crypto and tech, he emphasizes that crypto is the fastest horse in the race, adding that they are all the same bet. But the risk-adjusted returns in crypto are much better than anything else, despite the higher volatility. Let's get back to PAL's video as he further discusses the deep correlation between crypto, technology stocks, global liquidity, and business cycles.
I talked about the fact that the ISM is a repeating cycle since 2008 because of the debt refi cycle. So future ISM looks like past ISM inverted. So it suggests that we keep going into 2025, the end of 2025, which I've shown you a number of different formats. And with that goes liquidity. I showed charts earlier how liquidity and ISM all go hand in hand. There's the chart of global liquidity and the NASDAQ. Just keeps going up. What a beautiful chart. That's the trend we're trading here. It's easy. Same with Bitcoin. The reason the Bitcoin correlation is actually lower than the NASDAQ is because of these super spikes on the upside, because it's so skewed to the right tail, which is amazing. So now when we put this all together, we can actually forecast using a number of proprietary things we use at GMI out into the future. Please do not expect this to be a crystal ball. Do not expect these exact targets. It's directionally going to give you an idea of what the next 2 years look like. It gives you that target that we talked about before of about 21,500 in the NASDAQ by May or June of next year. With Bitcoin, it gets even more interesting. You see, that gives us a kind of extraordinary set of numbers, which make me think that these are overstating it. So I'm just going to assume that we'd halve these. Maybe they're right. I don't know. We'll have to see. The everything code is new. Yes, it's worked in the past, but who knows? Because it gives us crazy numbers like 218,000 by May. That's post-halving, post-ETF. It would give you a target of $500,000 by 2026, which is in line with the log trend. So it's possible. It doesn't feel like the most probable outcome. It feels a bit ludicrous to me. But anyway, directionally, half the numbers. Assume Raoul is a total moron, which certainly my wife would do, then you still get great numbers. So it's all to play for. And that makes me interested. Now, Bitcoin's actually not the horse I'm going to back in this race. Crypto is the horse I back the most. It's the fastest horse in the race, best risk-adjusted returns, high correlations to this global liquidity index, which is our everything code. So we know how the asset price behaves, which gives us a competitive advantage when we use our proprietary frameworks. Beautiful chart here, Fed net liquidity and Ethereum. Bitcoin has actually outperformed Fed net liquidity. the beach ball underwater. Why? Because of the narrative around the ETF. In macro crypto spring, Bitcoin always outperforms. Much like in macro spring, treasuries tend to outperform credit. Later, when we move to macro summer, alts, ETH first, Solana, others will start to massively outperform Bitcoin, much like junk bonds outperform treasuries. So ETH is just doing what it's supposed to be doing, but it's not giving us the big surprise. I think that surprise comes the moment the ETF is out in Bitcoin and people will focus on the ETH ETF and it'll bring the ETH ecosystem alive. This year, it's been a story of Solana, which I've been long all year, and Bitcoin. That barbell has been the best trade in the world. Or in fact, just owning Solana has been the best trade in the world, bar none. But ETH, it'll play catch up. It'll do well.
Raoul Pal is not the only one with crazy predictions for Bitcoin in 2024. During a recent interview with Coin Bureau, venture capitalist Tim Draper predicted that the leading crypto asset would at least hit $250,000 per coin in 2024. During the interview, Draper explained that he had predicted Bitcoin would hit $250,000 since it was trading at only $4,000 per coin. He, however, noted that the stifling regulatory environment has been a stumbling block since he made that call. "When I predicted that," he began, "what I didn't expect was how fearful and just old thinking the US would be. I think with a receptive US, we would be having conversations like the ones I have with the people from El Salvador. I think all that is a delay, an old government delay. I would say that my number, $250,000, will probably come pretty soon. I think this year we might see $250,000, he added. What are your thoughts on Pal's and Draper's 2024 and 2025 predictions for Bitcoin? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching. Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.